Good evening, Micro Map here, Map Investments. Taking a look at the futures tonight here. It's really looking bad for the U.S. Open tomorrow morning. That was pretty much expected with the market in correction mode, with Friday's sell-off and the selling pressure we've been having lately. The 10-year is over 320 right now. The dollar is almost at 105, actually 104.55. So it's very strong. The which is like a safety trade. People going to the dollar, thinking that it's safety. I wanted to see here if I could pull up the one. Well, we could do the year to date and then do the weekly. That's fine. 105 was the high, so we're almost at the high of the year on the Dixie on the dollar. All foreign currencies are down. Bitcoin is down a whopping 3,000 plus to 25,780. Oil's down $2 and a quarter to 1850. The S&P's down 60. I mean, it's just blood on the streets to be sincere. Ethereum down 300 to 1356. Gold down 8 to 1867. We did have a decent day on gold on Friday. We'll see how this whole gold and silver and metals and the market play out tomorrow. You can see it's jumping very fast here, down 62 on the S&P. Copper been range bound between the 420 and 455 mark, more or less. Haven't seen it go under 4. It's been pretty steady, the copper. The meets are closed right now. We have the NASDAQ down 237 to 11,631. The Dow Jones Industrial Average down 376 to under 31,000. Palladium and platinum down some. Palladium at 18,885. Platinum at 958. Natural gas down a little bit to 866. Silver down more than a quarter to 2165, and the VIX popping to 30 plus right now. Grains have been very steady. The grains, corn at 778, soybeans 1742, wheat 1090. I continue to stay the course in the 401k plan that I have, which is the Life Path 2045, which is more or less my retirement age. With BlackRock, I continue to contribute to that plan. I stay the course, dollar cost average. I'm also getting a match from a 401k from my company. So I continue to contribute to that plan. And if I can max it out for the year, which is about 20 grand, well, thank the man upstairs. It's a decent year. Maybe I did a lot of good sales and I'm able to max that out. I'll try and do that. It's a good way to put it away. And I use the Roth portion. So I save in a Roth 401k. So when I get older and I take that money out, I take my distribution, it's already money that was taxed at a lower tax rate, because in my opinion, in the future, we are going to have to pay higher taxes, and it's just going to become more difficult in the future to make these deficits and balances of government work. It's going to be very, very difficult. So I'd rather get taxed today, and because I think tomorrow we will have higher taxes, God willing, if I get to that retirement age. So stay the course. If you have 20 years plus, this is a great buying opportunity because markets over time do increase. Now, if you do have that account and then you have your trading account, or even your Roth or traditional IRA that you may have with your broker, try and have some discipline here. Bear markets can be nasty. They can go down a lot further. And that's what it looks like we're heading to right now, a big correction here. We could take a look here at the futures. performance year to date. And let me see here. Futures performance. And let's go to year to date. I think that we're not in a bear market in none of these indexes. Actually, well, I lied. So year to date, the S&P will open up in bear market territory tomorrow, based on where we're at right now. Um, and if it closes at that low, then we will be considered in a bear market. Russell is in a bear market, and the Nasdaq is definitely in a bear market, down 28%. Lumber down 51%. Natural gas is the leader year to date at 132 increase. I've been saying it's going to 10. We're at about 860 something. And there's a lot of beautiful names out there with higher earnings per share estimates that I think should be picked up on the dips here. Southwestern Energy naming one of them, SWN, WTI, HNRG, and coal. Coal being that is a cheaper source of energy compared to natural gas. I think coal names have been showing strength and are a viable strategy in this environment. Heating oil is high, gasoline is high, crude, Brent and WTI high, the VIX is high. Then you have your grains high, your lean hogs are high. Now they're talking about rice getting higher. So all the food and stuff like that has been going up. All the currencies are down, obviously, because the dollar is higher. Actually, the dollar is up 9% this year, which is pretty amazing. But in the face of that, you have gold up 2%. And I think gold and silver have a lot of catching up to do in regarding the commodity space. Silver's down 7% year to date. And I'll leave it there. We do have a bear market here in our doorsteps in regards to the S&P 500. The other indexes are in there, except the Dow Jones Industrial Average. We're down 14%, but we can easily get there too. Now, bear markets, do some research, Google them, and analyze how long they could be. Some can be a couple months, some can be a couple years. I mean, I think the Fed is in a tight situation here. They're going to put us in a recession if they do raise rates like they say they're going to do. I think eventually they will backtrack and pivot and lower back on interest rates and start printing again, because the national debt is so large that I don't think they're able to increase interest rates like they think they can to bring inflation in. Maybe I'm wrong, but that's how I'm setting up my strategy in my portfolios: precious metals and then commodity stocks. Now, bear markets can get ugly, and the safest thing to do in bear markets is, if you have some positions and they go down 8%, 7 to 8%, I would not hang around. I would just cut them and go, and just raise cash and just follow and stay engaged and wait for confirmation on the reversal. I could take a look here at the S&P daily chart, and you can see that we're probably going to be under the 380 mark tomorrow if the continuation on this daily chart here continues. RS is at 57, which is pretty weak. We had a big bar here of sellers on Friday, and it seems to be that a continuation will be here tomorrow. Here is the weekly chart. Weekly, pull it up. It's not coming up. Weekly. It's not giving me a weekly. There's the weekly chart. So here was the low, 380 was the low. So that's a key number here on the SPY. Right now we're 389. I think it trades 24 hour. Let me see if it's pulling up here on the Thinkorswim platform. We're at 384. So it's possible we test that 380 and see what happens there. Looking at the monthly chart, a lot of red bars here starting to sink. This was the COVID low was 218, and that's when they started printing money, and now they're tightening and supposedly raising interest rates. We shall see how low it goes, but stay on the safe side, and wait for confirmation that we're heading back up. And you can use this gauge here. See here, they confirmed that it was over and it was safe to get in. And then they started saying, okay, market and distribution days and stuff like that. And then market and correction, market under pressure, market under pressure, market and correction. And you can see this here. It says it here, market and correction on the IBD. Names that I'm going to be really looking at, I'm really going to be looking at a couple names on these pullbacks. RCMT, we'll be looking at RSMT, HNRG, PHX. So I like PHX. I was trying to listen to their conference call and learn a little bit more about them over the weekend. I haven't finished it yet, but you can see here on the daily we have a breakout. The fundamentals show that they're actually going to have 54 cents per share in 22, which is the highest they've ever had here, going back to 15, and the stock was at 20, a low of 13 and a high of 25. We're talking about a stock that's trading at $4 now. So, and they were earning 56 cents per share in 2015, 25 to $13. And we're going to have earnings here of 54 and 93 in the next 2 years, way higher than any of the estimates prior with that 93 cents. Management owns 4%, mutual funds own 11%. Institutional ownership has increased from 51 to 61. And the sales change have gone from 12 to 168 to 68 negative. So I'll be keeping my eye on this one because it's been trading nicely, engaged in acquisition and development of oil and gas properties, primarily in Arkansas, North Dakota, Oklahoma, New Mexico, and Texas. Like WTI as well. Still watching that one. And those for now are pretty much some of my favorite names that I'm watching. But PHX is a new one that I caught in my radar, and we'll be looking at to see what happens with these during the bear market. Remember, the bear market ends and the new bull market will start. And I think some of these names that I'm researching and studying will be some of those winners. And it looks like all of them mostly are in oil and natural gas and equipment and stuff like that. All has to do with the energy sector as of right now. And I don't think that's going to change in the near future. I think also we are going to see miners break out as well. And I think gold and silver, that those industries will start paying off here. But we need more confirmation. The only really one that I like as a miner is tech. I really like tech, and their fundamentals are very, very sound. 855.57 estimate for 22 and 577 for 23, and their sales are just increasing immensely. So tech is a great name to own. It's cheap. Management owns 1%, banks 2%, funds 39%, and funds have increased exposure from 907 funds to basically 100 more funds. I picked it up 1,007. So, anyways, this is your Sunday recap of the futures and some of the names that I'm looking for tomorrow. Stay safe out there. Follow your rules. 8%. Cut them. Let them go. Don't break the rule. Raise cash, and if you have winners that are in good bases that have come out of a pivot, and they're not 5% out of that pivot, and they're breaking out with nice volume, and the charts look nice and it's working, then add to them. Add to your winners and cut your losers. Well, Micromap saying good night and signing off. See you tomorrow. Bye-bye.